Hello, everybody. Welcome again to 18 Minutes with 180 Markets. Today, we are joined by both an offensive and defensive company. We are joined by David Christensen of Renascor Resources. Today, though, friends, is an incredibly, I'd say, important edition of 18 Minutes. David is launching a placement right now, and I'm proud to say that 180 Markets is part of the $1 million cornerstone. So obviously we like the story a lot. We like both the gold and the graphite, and we like David. And with that introduction, David, welcome to 18 Minutes with 180 Markets.
Thanks. Great to be here.
David, everybody invests not only in projects, but in people. Can you just tell us a little bit about your story and how did you get to where you are today?
Yeah, sure. Look, not to be too long-winded, I have a legal and a corporate finance background, and I got into mining about 15 years ago, a uranium mine, the Beverly uranium mine in South Australia. I was the CEO of Renascor Resources during the time in which we were mining at Beverly and we discovered the 4 Mile deposit. I worked there several years and I left that to found what's currently Renascor Resources.
So obviously then, despite the accent, just like me, you spent quite a bit of time in Australia. And I guess, in the interest of time and, keeping things tight, gold, obviously, an incredibly hot commodity, if you will, a storage of value and so forth. And one of the big drawers to your company has been your recent gold acquisition. Can you talk a little bit about the Soyuz project and what drew you to it, and maybe a little bit of background how you got there?
Yeah, sure. So this is a project we've actually held in our portfolio for, maybe 8 years now. And we originally acquired a large tenement package in South Australia for a uranium prospect. We dropped the uranium prospect years ago, but we always knew we had a bit of gold prospectivity at this, our Kunding project that includes the Soyuz gold prospect. And we held on to it, and we held on to it for a while. And we started to looking at it a lot more closely this year as the gold price started to increase and as there got to be significantly more exploration activity in and around the area where it's located, the central Gawler Craton of South Australia. We had some particularly good numbers at some of our prospects, shallow gold with up to 16 grams per ounce, relatively near surface, so real opportunities for shallow high-grade gold deposits. And it's a sort of deposit where if it were located in a gold district in WA, it would have been drilled out years ago. And we always held on to it because we knew it had great prospectivity. But then with what's happened in gold this year, it's really just too hard to ignore. We started getting knocks on our door about people who knew we had it. We put out a little bit of information to the market, and we got more knocks on our door. And it's gotten to the stage where, really this prospect is too good not to do some degree of activity. And that's a large reason for this capital raising is to permit us to go in there and do some work here and drill it out and see if we can really get some shareholder value by discovering a gold deposit.
Yeah, it reminds me, and I guess, for a lot of our fellow investors, of sometimes you own a piece of property in an area that was formerly a terrible location, if you will. All of a sudden it becomes gentrified and the value goes like that. It sounds somewhat a similar type of story. But not only that, what also, I suppose, speaking from our perspective, what has attracted to us is the shallow drilling and the prospect that, like, look, this can be real. This is not some, 20-year type of project. I mean, this is very near term in our minds. Is that how you see it as well?
Yeah, I think so. And I think what's happened with the gold price going up and more activity happening in the area, maybe the success bar and how many ounces you would need to prove up is significantly lowered. Obviously the gold price going up and the Aussie gold price in particular going up makes things attractive. But then with other people being active in the area, it gives the prospects of using other people's capital if need be. But we think there are some real prospects here to put together a significant number of ounces.
Yeah, and that's, I suppose, again, one of the attractions, as you said, is that there's a lot of activity nearby. which always just leads to discussions, conversations, and what we view as a lot of upside optionality. And then obviously, through your corporate finance background, uh, we're entrusting you, and I suppose that, you know how to put together the best deal to enhance shareholder value for sure.
Yeah, I think that's right. And the decision at this point is look, the historical work is too good to ignore. We want to get up there. We want to drill it. We think there's a real opportunity to put together a viable economic gold deposit. And I think we're not the only ones who have figured this out, because a lot of other people are active in the area.
Absolutely, absolutely. So switching, I guess, a little bit of gears here, or a big gear, going from gold to graphite. Can you just talk a little bit firstly, from a high level point of view in the graphite market, what makes it such an important commodity?
Yeah, largely electric vehicles. So it's the electrical vehicleization, I guess you would say, of what's happening globally, where we're moving to more EVs. We're seeing significant growth in EVs. This is leading to more batteries, more lithium-ion batteries. As you need more lithium-ion battery, you're going to need more graphite. Graphite is the key component in the negative electrode, the anode of the lithium-ion battery. So what that's doing is it's transforming graphite from what has historically been an industrial mineral into a battery mineral, and it's a change that I think we've been talking about for a number of years, but those numbers are really starting to play out in real time now in terms of the tons of material that are needed. Now, COVID probably slows things down a little bit in terms of people's risk appetite. But the medium term even is looking particularly good, because one thing we're seeing as a result of some of the COVID related issues that are facing the world is people are much more concerned about gaining access to critical minerals. Graphite's a critical mineral in particular because of its use in lithium-ion batteries.
Right. Absolutely. We're all working on a COVID situation, and we all have to deal with working from home or working from remote locations or whatever. So it's quite okay. And I think that that's onto your point. And, I suppose, one of the things that we're always big on is the mega trends. And I think that electric vehicles and electricity and batteries is certainly one of those mega trends that we don't know if it's going to be today or tomorrow, but that is the way that the world is moving. Is that your take as well?
Oh, absolutely. I mean, what's happening with electric vehicles is we see it every day with announcements, largely in China, largely in Europe, about moving to more EVs, subsidies for EVs. The demand for EVs is going up. They're going up in percentage terms and in real numbers. That's leading to more lithium-ion battery factories being built. As those are being built, more graphite is needed, and that feeds into the mega trend. And it's really a fundamental shift in the use of graphite. And it's something we've been seeing for a number of years, but we're starting to see finally those numbers come into fruition. And that's where our project sits, because we think we're particularly well situated to take advantage of that transition from graphite from what's been an industrial mineral into a battery mineral.
Yeah, and I'd say also one of the, speaking of, locations, your project location being in Australia, and I think that this is important for the audience to know, there are a lot of issues around China and demand and protectionism and so forth. And then also another part of the world source of graphite is Africa. But when you think about Australia, it comes to with a much lower sovereign risk. And then, maybe you can touch on that and then, take us through the Siviour graphite project, how it's the biggest one in Australia.
Yeah, look, so from a demand perspective, certainly that demand is growing. Where's it going to come from on the supply side? Well, graphite's not difficult to find as a mineral, but it's difficult to find sufficiently large quantities you can produce a saleable product at a low price. And that's the real difference of this project. It's the second largest proven reserve of graphite that's reported in the world. So not just in Australia, but the world. So it's a great big graphite asset. It's flat, it's near surface. This allows us to mine it. We've been through a scoping study, a pre-feasibility, now a definitive feasibility study. our operating cost is amongst the lowest of any deposit in the world. What that means then is we can translate that low cost from a concentrate, we can upgrade it to a product, a spherical graphite product that's sellable into the lithium ion battery space as an anode precursor material. And this is where the critical mineral becomes particularly important. That precursor material that goes into anodes has to go through China now. 100% of the graphite that goes into lithium ion battery, the flake graphite, comes from China because they have 100% of the processing capacity. What we have with our project is a pretty unique opportunity to compete with China competitively. And that's largely because of the strength of the ore body itself. We can mine it at a very low cost, therefore we can upgrade it into spherical graphite, the precursor material then that would go into anodes that are sold to anode manufacturers. And we can do that competitively. And we think we can compete not just with the Chinese, but anybody in the world. And that's largely because of the strength of this ore body. It's a big ore body, it's near surface, it's got particularly low costs. And from a critical mineral perspective, if you look around the world and you're saying, as more electric vehicles are being built, you need to be able to get that material from a safe jurisdiction. You can only get it from China right now. That's the only jurisdiction. We provide what we think is not only a good opportunity to get an alternative source, we think it's the best opportunity in the world.
Yeah, no. I mean, we couldn't agree more, especially about, look, we all hope the trade wars go nowhere because, there's an expression that everybody loses. But saying the above, we want to have that protection in place. And that's what we think, we have here, with the project in hand. And also, I think that the other, I guess, risk mitigating factor from our point of view, this is actually relatively simple. Can you just explain for the audience, it's flat lie product where it would be a bit easier to mine than maybe would be suggested?
Yeah, look, so the advantage here is this is a relatively flat-lying ore body. Graphite tends to be vertically oriented. This body isn't. It's flat, it's near surface, it's in a lot of respects, it's more like a coal seam. And that's one advantage. The other advantage is it's quite large. So what we're able to do is we don't have to move a lot of earth to get to the material. We can also selectively mine because it's so large. And those two factors together give a particularly low mining cost. And then that mining cost translates, you process the material, there's a low cost for producing the actual product, the ore body, and the fact that it's so large. Again, it's the second largest reported proven reserve of graphite in the world.
Yeah. So I guess, it's, as I said, when we think about Renascor, we think about it as an offensive and defensive company. We love the gold and the graphite combination. Obviously, the gold right now is incredibly exciting. And I think it's important for the audience to know that you didn't go out and just buy a project because you're like, gold is hot now. You've had this project for 8 years. So this has been, frankly, a long time coming. And again, I come back to that adage that I think a lot of our investors can understand about property, where formerly an area that maybe wasn't so loved, all of a sudden, now your project becomes loved, if you will. So that's on the gold side. Then also we love the growth stories. I mean, obviously we can all see, electric vehicles, lithium and batteries. We all know about it. I think that we've learned a lot more about graphite and how important that is as a material, and also, from a protectionist point of view. So in closing, because obviously I know that you're incredibly short on time here, the capital, just would like to turn to the capital raising for a moment. Can you just talk a little bit about, I mean, obviously, again, 180 markets, we are certainly big fans, and we wouldn't be investing if it wasn't the case. Can you just talk about the placement and where do you see the use of the funds for the next 12 months?
Yeah, so again, the primary reason for doing this is to allow us to both to continue doing our graphite work, where we're looking to secure offtake commitments from our project. But we also want to move forward on the gold. And the gold opportunity is really, it's like you're saying, it's too good of an opportunity to pass up on. So what we're going to do with the proceeds from this offering is the largest chunk of it's going to go into committing to a drill program on the gold. We'll continue along on the graphite. Again, our goal on the graphite is to get to an offtake agreement, but we expect to be active on the ground doing the gold work while we're working. And again, from our investors' standpoint, you don't see a lot of the work we're doing on the offtake side. That happens all sort of in a big bunch, if you will. But we expect to be particularly active in moving out into the field, doing an IP survey, doing some sampling, and drilling out these drill targets over the next few months. And to some degree, gold is a natural hedge against some of the issues that are impacting graphite. You know, it always takes a bit long. You finish the definitive feasibility study. You want to move into offtake and finance as quickly as you can. COVID, of course, introduces complications. We can't travel, have site visits. So we do move forward. We do make progress, we think, and we think we're actually making very good forward progress on the offtake. But in the meantime, this really gives our investors an opportunity to see activity, not only on the graphite side, but real activity on the ground in a commodity that is in particularly high demand right now, where we think we have a particularly good prospect.
Yep, absolutely. David, again, thank you so much for the opportunity. I mean, we really, we do appreciate it. We're putting I'd say our money where our mouth is. Again, in closing, people invest in projects and people. We think, friends, this one fits the bill. Thank you very much, David. And I think it's fair to say that we'll be hearing a lot more from you over the next couple of months.
Okay, great. Thanks very much, Greg.
Bye-bye.
Okay, all the best.